This segment sponsored by Foster Financial. It is time for Women's Wealth Wednesday with Foster Financial, and today we're going to talk about insurance planning, so stay tuned. And joining me is Caleb Doan, their Vice President. Hello, Caleb.
Hi.
Welcome back.
Hi, thanks very much. Appreciate it.
Okay, so this topic is very interesting, insurance planning, because insurance is something that really everyone needs, and at different stages of your life, they may need different types of insurance that they may not be aware of. So can you break down what the insurance planning is all about, especially when it comes to financial planning?
Yeah, definitely. I know we've kind of been talking about the basics of financial planning. Insurance is one of the pieces that people might not initially think about when they're thinking about financial planning. A lot of times they're thinking about more of the investment side of things, but insurance certainly plays a really big role. So we want to make sure it's part of a holistic financial plan. And there are several different types of insurance that we look into when we're doing a financial plan for clients. We'll look at their health insurance, we'll look at life insurance, and then we'll even look at long-term care, which is kind of like nursing home insurance. And all three of those might be necessary for clients, or possibly, over time, some of those might fall off. Oftentimes we see life insurance, especially when you're younger in your working years, life insurance is a bigger need. As people get closer to retirement, it's maybe not as much of a need, but then you might need long-term care insurance because over the course of retirement, you might be more likely to end up going into a nursing facility.
Exactly. And so let's break it down a little bit further. So life insurance, of course, is in the event that you die, you have a beneficiary that will receive a payout. And I know, as you're investing in your life insurance, like you said, at a young age, the older you get, the less you're investing because you're closer to an older age and closer to the death, if we will. Is that what it is? Is that why?
It definitely depends on the type of life insurance. So even within that first life insurance bucket, there's a lot of different types. There's term insurance, there's whole life insurance, universal life. Some of them are set up where you're going to kind of front load it when you're younger, and then maybe when you're older, you don't have to pay as much into it. But it really depends on the type of insurance that somebody has. And so with part of the financial plan, one of the things that we do is look at all the life insurance policies that someone has in force, and oftentimes they might not really know the type of insurance that it is. They're not quite sure if the policy they have is a whole life or a universal life. And sometimes those policies are not guaranteed to last for their entire life, even though the client might think that that's the case. Oftentimes that happens with universal life. So we do a kind of a due diligence on all the life insurance policies that somebody has, let them know kind of the current health of those policies, and then make a recommendation. Maybe they're overinsured, maybe they're underinsured, but we want to make sure they understand that. And then on the health insurance side, when somebody's getting closer to retirement, one of the biggest things that you lose outside of your paycheck, of course, when you retire, is your health insurance through work. Medicare doesn't start until 65, and so if somebody's retiring prior to 65, a lot of times we got to make a plan for what's that health insurance going to be in the meantime, and so we use a lot of things for that.
Yeah, because there is an option, I guess, to get independent insurance in the meantime, and you're right, you got to plan for that because that's maybe a higher out of pocket cost.
Right.
And so, okay, interesting. So Medicare does not apply until 65, but people are allowed to retire and start getting their Social Security at 62 and a half? Is that?
Just 62. Yeah, would be the earliest. Yeah. There's a lot of those half ages, though, so that's a good half. So yeah, they could start collecting Social Security as early as 62.
Interesting.
And then, of course, you have to plan for private health insurance for those few years, unless maybe you have a spouse that's still working and you can be on their insurance.
Yeah, okay, so let's talk about the long-term life insurance, or was it long-term?
Long-term care.
Care. That's one that people don't really talk about as much. So can you break down what that insurance is all about?
Yeah, that's probably the most rare out of the three types of insurance policies for folks to have, but that can be one of the biggest expenses that somebody has in retirement. If they go into a nursing facility, I mean, they can cost $10,000 a month if somebody needs memory care, they might have dementia or Alzheimer's. And so that obviously can eat away significantly at somebody's savings. And if they have a spouse that's living who's not in a nursing facility, it might be eating up a lot of their joint assets. And so it can leave the other spouse in a really difficult financial situation. And so that's where we look at long-term care insurance, which basically is triggered if somebody needs to go into a nursing facility or they can't perform some of the main daily living activities. And an insurance company will step in and start paying for some or all of those long-term care costs.
So follow up for you, Caleb, does that apply the same as like car insurance? And what I mean is that, do you have to have it in advance? You can't get into a car accident and then retro call and say, hey, can you help me? Do you have to have long-term insurance in place before you even know that you will be going into a nursing home?
Yeah, you certainly would. And there's different types of policies. There's kind of traditional long-term care, there's asset-based long-term care, and we kind of prescribe different ones depending on what the client's needs are. But yeah, you would certainly need to have that ahead of time. By the time you go into a nursing facility, you're typically considered uninsurable. Of course, because the insurance company, if they know that you're going to need the coverage, for certain, they're going to be, unlikely to cover somebody.
Yeah. Okay. Well, thank you. This is another reason why it's so important to work with a financial planner that is holistic, so you cover all the elements that people really need to know.
Yeah, absolutely.
So thanks, Caleb.
Thank you.
And if you would like more information about Foster Financial or taking an opportunity to work with them, well, guess what? Their phone number and website is listed below. Give them a call and start your financial planning today. And I look forward to seeing you after the break. Bye-bye. This segment sponsored by Foster Financial.